Good afternoon, traders. Welcome to day 8 of our online Trading Waves course. Thank you for joining me this afternoon. I hope you're all good. Right, so as I've said yesterday, we are going on a long weekend in South Africa. So we will not have the daily webinars on Monday and Tuesday. We will resume with the daily webinars on Wednesday. We will, however, have the Sunday webinar as per the usual time. I usually send out the link 2 hours before the time because my times on Sundays are not consistent. So we will see you. I will see you guys again on Wednesday. And those that will attend the Sunday webinar, we'll see you then on Sunday. All right. Let's get started. Unfortunately, and this is very disappointing, guys, I did not get any volunteer to do a webinar today. We've had a couple of people that have done webinars and they've done extremely well in the past. So I'm very disappointed that there was no one who's willing, especially from the older members. Guys, this is an opportunity to learn. I know it's not easy, but this is an opportunity to learn to get to do this. All right, so I'm still hoping that next week I'll get somebody so we can go through a historical chart. Maybe on a weekly basis, we go through one chart. So if there's still interest to do this, even next week, the opportunity is still available. We can still do this. All right, now let us have a look at Euro JPY. And I'm looking at Euro JPY because Topay had sent a chart, which when I looked at, historically had a very nice structure. Let me just see if we can revert back to that structure. That chart that Topay had sent last week, I think it was last week or this week, I can't remember. But let's check a chart. So there's a very nice structure on Euro JPY. Okay, there it is on the weekly. Now, even without going through historical analysis, when I open this chart, I see patterns. Okay, I see patterns waiting to form. I'm gonna go into the weekly chart on the actual price chart. I'm gonna pick one, yes. I'm gonna pick somebody to do the presentation next week, Thursday. Okay, next week, Thursday, somebody's gonna present a historical chart. So not only the historical chart, so what happens is the same process that we go through when we do analysis. That means you are going to go into FX Top. You're gonna get historical data from 1953, get the overall view of the chart. Then you go down to the weekly, go down to the daily, go down to the 4-hour, tell us where you're gonna enter when the trade sets up, and that's how we're gonna, that's what I expect. You go through all the time frames till you get to a trade. Now, when I look at this, I see a beautiful chart, guys. I see a beautiful chart. So let's have a look at this. Let's go to the price chart itself. Let's go Euro JPY on the weekly. Let's go weekly. Just remove all of this. This here was 2017. I just want to see what this sell idea was like here because I can't even remember how we traded this, but I posted this in 2017. I'm just playing it now because I'm looking at it. Let me switch on the analysis here as well. Okay, so we were looking for this to drop here, I think. Let's just see what was the analysis here. Sell idea. That did not actually play out. That didn't play out. Oh, that was the sell there. This was the sell here. Expected it to drop, to continue lower up to the harmonic pattern level. It only went this much. And if you look at this move from here, the top, this is a weekly chart. So from the weekly, from 123 to 119, that is 400 pips drop, came here from the trend line and then kept pushing higher. Now we are here. Let me get my annotation tool here. It's freestyle today, guys. So we're just going to be picking charts and going through them. We're going to go through a couple and see what to expect. My annotation tool. Are you guys good today? It's a Friday, guys. And it's a long weekend. We're going on a long weekend. Okay. So I'm expecting, okay, before we talk about the analysis, this was the analysis here. This is what we're expecting, dropped to 400 pips and then continue higher. Okay, so let's have a look at what we're expecting now from this chart. Now, if you look at this chart, I can see that this is coming down correctively. And we're going to look at the sequence and the cycle. When you look at this chart, I would expect that this comes back down to the 2017 low, the July 2017 low here. And there's a reason why I'm expecting this to do that around this level, 2017 low around 108. Okay, yes, we've got a pulsing move here now. And yes, there is a possibility that the structure can change, but this is playing the puzzle. So we'll look at the number of options in which it can play out and see how we can take the trade here. Now let's have a look here, switch off everything here. I'm on the weekly. This is the whole weekly chart. There was that sell idea there, but the sell was meant to go all the way down here and break the low because we were looking for this to make 5 waves down there. Okay. Right, now this is what we have. See, we've got a diagonal here, 1, 2, 3, 4, 5. So already that is an A move, 1, 2, 3, 4, 5. So this is a 1, 2, 3, 4, 5. I'm looking at this as an A, as a B, and your C is a diagonal. I'm just identifying the pattern as I see it here. There's a pullback in this one here, that is your B wave. So your B wave, you can see it's a regular flat. All I'm doing is identifying the patterns. I have not even looked at the relationship as yet. Now we've got this move here, pullback. We've got 1, 2, 3, 4, and a 5. A, B, C, clear three-wave structure. Now after that, you've got another pulsing move. You've got another pulsing move. Okay, after that pulsing move, you're getting a three-wave structure. All I'm doing is identifying the corrections, guys. I've got a pulse move, I've got a pulsing move. Now I'm looking at this as a 1, 2, 3. Could this be a 1, 2, 3, 4, 5? 1, 2, 3, 4, 5. And this becomes a W, X, Y, X, Z, and then we get another 1, 2, 3. That is also a possible structure. Okay, now do not rush when you look at an analysis and it makes sense. So what you want is to get both options, and it is actually, Elliot actually said that it is important to get an alternative so that when one alternative does not play out, you know what to look at. So this could be going up here and take off like this, but how are we going to know how that is not going to play out like that? Because we've got the stock and the RSI. We are not going to take a trade if the stock and the RSI does not confirm. If this is going to go up, the stock and the RSI will confirm and we'll take the trade. Now, is this move, we are currently in this move. And you can see that I have not really completed labeling the structures or identifying the structures here. I'm just identifying what I can see so far. What I see is a pulsing move, 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5. So it's a 5, 3, it's a 5-wave move, 1, 2, 3. That's another pulsing move, 1, 2, 3, 4, 5. Now there's another pulsing move, 1, 2, 3. You won't really see the 5 here because it's in a higher time frame. And now we've got this structure. Is this structure going to form? If it does form, we'll expect this to do this. But this move is going to come. But when is it going to come? Are we going to get this one to come and retest the low here? Because we are still about 1,000 pips away from that level. And this is still dropping like this. If you remember, I've got a sell setup on euro, and that is the reason why I've got that sell setup on the euro on trade setups. Ask a lot of questions, guys. Freestyle today, so we don't really have a structure. We're just going to look at euro JPY and look at a couple of charts in the higher time frames. Okay, so this is the reason why I'm expecting euro not to go all the way up. Let me clear this for now. Now this is chief. Chief is similar to euro. So euro, I'm expecting that, okay, we can see that the correction is pushing higher, but that's what it is. It is a correction and it's going to push lower. Why am I expecting it to push lower? It's going up correctively. If it was going impulsively, I was going to expect that we're going to have this structure. Let's go back. I was going to expect that we're going to have this structure, the current one that I've got, if it was going up impulsively. But it's going up correctively, so which tells me that this move is still going to complete to the downside. And what structure will that be? Let's clean this up a bit. It will not change much. That structure will simply be, it's a possibility of this has made a three-wave move down, has made a three-wave pullback, and we're going to expect another three-wave move back here. And that should be also in green, actually. You see, and you don't force the waves. It should be exact. Now look at the size of this. Look at the size of this. Here, if we go to the lower time frame, let's use, which color can we use? You can use this blue here. If you look at this, you've got three waves within this swing. Now, if you get this, doing this at the 61, which looks like it's happening at the 61 and correcting like this, you are guaranteed that this will come back down here into the blue box, and the blue box of this swing will be at a confluence of this structure. And that structure can also have this before we drop. Or rather, let's clean this up. This up here. Okay, so with this, I am done. I can look at this. I have not even gone through historical data analysis. I can see clear structure here. I can label this one as a three-wave move. Is a three-wave move to the downside. 1, 2, 3, whatever is happening, it's going to be the X move. So that X move should complete like this. See, and unfortunately, that is how the Forex market moves. It can go flat. It can go flat. It's not like the stock market where people are just buying, mostly just buy, and then it's on a bullish trend for so long. For years, the S&P 500 has been on an uptrend because people would prefer just to buy the stocks, obviously. Okay, right. So you've got that, and that whole thing will be your X, and you'll expect your Y to be another three-wave move for amount of space there. See, so now that is our forecast in the higher degree, WXY. If you wanted to label internally, what would be the labeling here? What do I put in here? Let's see if you understand. What do I put in here? A, because it's impulsive. A, this A is actually in this yellow degree, so I should put it in yellow. A, B, C. Now, because this has started as an A, you already expect that if this structure plays out, you want a similar structure as this. There was a question by Jeremy. I can't remember. No, it was not Jeremy. It was Steven. There was a question by Steven. Let me go to it. And this I need to clarify. Let's go to Steven's chart. Let's clear this. So there was a question by Steven asking, hi, Victor, are you expecting a bigger correction because the first one is too small to correct the impulse? He was talking about this one being too small. And just hold on a second, just 1 second. Okay, let's resume. So he was asking if I'm expecting a deeper pullback. But because this has made this sharp move, I don't expect a deeper pullback. I'm expecting a similar move. So I'm expecting this. This is already an A. So if it is an A, I'm expecting that this will be a C. So if it is a C, you can't have a deeper pullback. If this was a W, which would have been deeper, then you would expect a deeper pullback for you to enter. So that means if you're getting a Euro New Zealand pair and you get a slight pullback like this one, that means you can enter the market. Slight pullback like this one means you can enter the market again and ride the trend, because that's how it played out in the first swing. Okay, I hope that answers the question. So that is the expectation. You're simply looking at an A, B, C. Either that, only if your C then rather is going up in a diagonal, then that's different. Then you will get a deeper pullback. But unfortunately, you will never know beforehand if it's going to make a diagonal or a sharp move. But I'll just, if I get a shallow move like this, I'll take the trade because I'm expecting a sharp move like that. All right, let's go back to our analysis. Right, let's go back there. And that's the structure that we have. Now, I'm going to put in the labelings here. Purple WXY, WXY. This will be in super cycle degree, and we'll make it purple. Okay, then you're gonna have A, B, C in the next degree. A, okay, C there. That's the B there. Okay, Albert is saying it's not quite getting the labelings from left to right. Okay, I'll get to that just now. I'll get to that just now. A, B, C. This is, I will use the blue for this one. Let me find the blue here. This blue. Fortunately, it's not so visible. I will use this degree, the cycle. Okay. A, B, and the C. Okay, let's switch off this now. So Albert is not following. I'm not sure exactly which part. I cannot quite get the labeling. Would you mind running through what you see from left to right again? See the Juno from A to B is what confuses me. A to B, the jump from A to B. This is a regular flat. It's a flat correction or an expanding flat. It's a 3-wave structure. Can you see I've got 3 waves there? It's a 3-wave structure. The jump from A to B is what confuses me. Next to B. So from here, from B going down is a diagonal. This one, oh, this jump here, okay, all right. This jump, all right. That here, if you remember when I was explaining, during the course, I can't remember which day, must be the strategy day. If you get an impulsive move and an impulsive move like this, okay, you would expect that at some point you're going to get a corrective structure that corrects this move first. Then if this move is corrected, it cannot be it has to be 3 waves. So this is the move. Maybe let me do it in different colors, and I see where this confusion is coming from. Is this complex corrections, right? So let's say you've got a pulsing move, and you get another pulsing move. What is happening here is that you've got this main swing. That is your main swing, and you need a correction for this swing, but you also need a correction for this one. Now, let's say you've got that, and the correction still does not come, instead you get another pulsing move. Let's use red this time. You see, you've got a pulse, you've got a pulse, you've got a pulse, and no correction. Now, I've said when during the course, Elliott wave moves in mostly three waves, and it's always going to be a move, a correction, and a move. But what you're seeing here is not the sequence that I've shown you. It's a pulse, it's got a pulse, it's got a pulse. Now, how do you deal with that? Now, this is how you deal with it. So let's have a look at this, how we take care of this one. So now you've got a pulsing move, you've got a pulsing move, you've got a pulsing move. Each individual pulsing move should be corrected. You've got a pulsing move here, no correction. Pulsing move here, no correction. Pulsing move here, no correction. Let's start with the lowest one. We start with the lowest one. Right, so let's say you get a correction on this one. Fine, you are happy, you've got a correction. But you got a correction for this move. Now, this move cannot be in 2 waves. It has to be in 3 waves. So you need to get a pulsing move. Now, I've shown here, it looks like a zigzag. It can be a regular flat. This correction can come and take the low here and push higher. It can come and break here and push higher. Doesn't matter. All that matters right now is that this 3-wave correction in red has completed. All right. Now, this is just marking the correction. These lines have got nothing to do with the structure, right? I'm just marking, identifying that this is a regular flat in this case, right? Now, what is this red correction correcting, right? It is correcting this pulsing move, the green one. Now, the green one is a pulse, but all of this red move is the correction for the green. So what should the green do after the correction? It must have a pulsing move. Now, this green correction is correcting this pulsing move. That means that the yellow is corrected by this whole move. I don't know if that makes sense. Now, if you're going to label this, you're going to go from the lowest time frame, your red degree here, depending on which structure is coming in. If it is 535, you are going to have A. If it's 535, you're going to have 5 A, B, C. If it is 333, you're going to have WXY, A, B, C. Now let's go higher. Same here with the green. If it is 535, you're going to have ABC. Okay? If it's 333, you're going to have W. But this WXY will be in a higher degree than the A. This is the red one. So let's just say do this ABC. Now you go to the yellow. The yellow one is going to be in a higher degree than all of these ones, and it's going to be A, and the whole green now will be your B. The same way that your whole red is your X on the green, depending on the structure. Is everybody happy with this? Because this you're going to find quite often, and this is what my focus is here. Albert understands. Everybody else, is everybody happy? I'm happy to explain again. We've got a bit of time. So here's a question from Kubakile. So yellow B, okay, assuming that you're referring to this schematic structure. So yellow B within the X, yellow B within the X, is a complex, and internally it also has another complex B. That's correct. The yellow B internally, it's got a complex B, and internally also a complex B, yes. Now this process can go on like this. You can have, it depends what you have, but I try not to have it more than three complex degrees. You can have this impulse, you can have impulse, you can have impulse, you can have impulse, you can have, now if this is 1, 2, 3, 4 degrees now, you can do the same thing from the purple, then come the green, then come the red, then come the yellow. So this can go on up until infinity, but try not to have it more than 3. And typically you will not have more than 3 degrees in one. And once it becomes more than that, then you're probably not even doing it right. Okay. So this is why I'm expecting you've got a pulsing move, you've got a pulsing move, you've got a pulsing move. No, actually, you don't have a pulsing move here. You got a pulsing move and a pulsing move, and the corrections only starts after this second one. So that's why I'm expecting that this is gonna play out like this. All right. Now there's another way that this can play out, but because we understand the sequences and the degrees, so only use 30 degrees on a time frame to avoid cluttering the chart. Yes. Now this, will this be wrong if it played out like this instead and not have this regular flat, but instead just have this zigzag here? There's that possibility. It's also possible, right? Do you agree? Do you all agree? You can have this structure playing out like this. Yes, can also play out like that. But the market does not usually move in a straight line like this, so we typically don't expect these straight line moves. And it will not be wrong. What will happen if it gets to this level? We're going to expect that it's going to make this bigger regular flat. See, it's just playing with the patterns. It's a cycle. It's a cycle that keeps playing out here. So do not ever get married to one specific move. Let the chart give you what the next move is going to be. You can have your forecast for the next 5 years. You don't have enough data for the next 5 years, but you've got enough data for the next immediate move. For example, if you go down lower here and you get a pulse, you know that after this correction, you're going to at least have another move to the upside because you've got enough data for that. Okay, so let's look at this one here. Let's switch on our labeling spec. So we've got an ABC here. We've got that ABC as a W in purple. X is the big one here. And here we're going to have another A, bigger A here. And we're going to use the primary degree for this one. Let me remove this one for now. I actually want to see this one in the, I don't want to see this in the weekly. It's too cluttered. Don't want to see this in the weekly. Okay, even this I don't want to see on the weekly. It's too cluttered. Just clearing this, all of this, you'll see them on the daily time frame. You won't see them in the weekly. Let's go daily. You see all of those labelings that I removed from the daily, you see them on the, sorry, from the weekly, you see them on the daily. Now this whole move here will be a bigger A, a bigger B, depending on this, how this structure is going to play out. Now I already have that. I already have the ABC there. That's the B. Now let's go down here. You can fill in this here, depending on the structure that is playing out as. It looks like an A, a B, and a C in this blue degree. A, B, C, blue degree. Don't want to see it in the weekly or the monthly. Has to be in this degree. Blue, primary. Okay. Just filling in to show the degrees here. So what you see here, though all those letters that you see, they should not confuse you, because what you're doing here is just going down to the lower time frame. When you go to the lower time frame, somebody could have said, if you look at this, somebody who does not understand how wave moves, they would have said 1, 2, 3, 4, and possibly an extended 5. A number of waivers could have come up with different labelings here, but because you've got a set pair of rules, you can see that this is a clear 1, 2, and a longer wave C, or rather a wave Y in this case. That is the blue one. Because this is clearly 3 up here, 3 back here, and another 3 to the upside. And that 3 to the upside is this one here, 1, 2, 3 here, pull back, and a 3, extend it. So that is a 3-wave structure. Now, if we come to this one here, those letters you can see now, they should not confuse you at all, because all they're doing is identify the structure. So I have got the blue WXY like this. Let's show it. And if you send me a chart, right, with all these labelings, you're just giving me work to go and try to identify the patterns for you if I want to understand your chart. Because if you send me a chart like this, I'm going to say, okay, you're saying this is a blue W. What does that blue W mean? I'm going to go and say, you are saying your blue W is this 3-wave structure. What does the X mean? You're saying your blue X is this structure. And what are you saying about your Y? Now you're saying your Y is this structure. Now we can see now that this Y is much bigger than the first X. Now we can look at this as follows. Let's switch off here before let's switch off all those letters. We can also see another 3-wave structure here. So that means this structure here can be a W, a X, and a Y. And if that is the structure, you've got here 1, 2, 3 for a Y. You've got here 1, 2, 3, sorry, for a Z. This is a Z here. Let's draw the X properly. 1, 2, 3. Now that's W, X, Y, X, and a Z. Makes a lot of sense. Now, if that is the case, that means this is going to come down without breaking that low that we wanted from the bottom, without breaking that low. Is that going to be the case, or we're going to get this one coming down here like this? Because this Z can also be a W, X, Y, Z in the lower degree. So that's why we're expecting that this is corrective and it's going to come down. And that's the structure that I'm looking for. And that is why I've got the trade and the trade setups where I want, let's just look at the structure. I want this one to come in, take this low here. And if it does that, that's going to be a beautiful structure. That's going to be a W. That's going to be a clear Y. Now let's look at this one internally. You're going to have this one, 1, 2, 3, 1, 2, 3, 1, 2. This one becomes a bigger structure, and then you get this one here. So something like this, 1, 2, 3. Now this one becomes this bigger structure. So whatever is happening now is a pulsing move. So that pulsing move can have a correction and push higher, and then we continue. Will this one will be an even perfect structure, okay? Because it will be this structure here. So even if it's bullish, this bullish move, is it a long-term bullish move or is it a short-term bullish move? Because you can get this one doing that and coming down here. So the euro could be short-term to the upside, and that short-term move can be traded because it could get back up to the 124 level. It could go up to the same length as this move. Now, trend line traders will be trading it like this. You see a trend there, see a trend there. When it gets back to the trend line, it pushes lower. And they'll be saying, okay, we're on the trend line, we're selling again. Same way you were selling here. Here you didn't have a trend, here you've got a trend, now you can actually sell from there because you've got two. So trendline traders will possibly be selling here, and then when it starts breaking out here, they'll be trying to sell the retest of the trend line and then pushing higher. So you see, we can see almost all the strategies within the Elliott wave structure. So what were we expecting here with the euro? The euro can make a 3-wave move. We already have a 3-wave move in the lower degree. This can do this and push back to the trend line and go lower. So that's why you'll see when I'm doing the analysis, I say, oh, possibly one more up before we come down. That's what I'm expecting. Now let's go to the 4-hour. Now if we go to the 4-hour, we can see, now we're focusing on this corrective structure. The 4-hour can clearly show us that we've got a 3-wave pullback corrective structure. This is the corrective structure on the 4-hour. Is it complete? We don't know. It could be the start of another bigger move like this. So this will be this one here, and you could be starting that bigger correction that we're talking about. It makes a 3-wave pullback that I'm talking about back to the trend line, and then we go and retest that 108 area that we're looking for with the structure. So there's still a possibility for it to do that. In the meantime, what do? You wait for a sell setup if it's going to give you one. Now, if it's going to give you a buy setup with this corrective structure here, your stock and the RSI will show you, your structure will show you, and this will have to break to the upside. You put your stop loss there, and then you'll be targeting the move that is the same size as this one. And if you get this one, because it's a three-way move, you can even get that high probable move where you've got this one here, and you've got this as the first length here, A, and your A should be, in this degree, should be at, let's see if you remember, where should this A be? Where should this A be? Let's see who remembers. Somebody? 61.8, not 6,18. I hope that's a that's a typo. 61.8. Now pull back, and if it does this, I'll buy this move and put in a buy or sell limit order here, and because that's what the blue box is gonna be. That's what the blue box is gonna be, and I'll be selling now with confidence because I have the blue box, I've got the trend, and I've got the structure. So you sell from the blue box, targeting all that move to the downside. And that is how I trade. I look for the big moves. Obviously, you do take advantage of the short market moves as well. So you can see my chart does not necessarily have the labeling in these lower time frames. You can do that if you wanted to. You can put in an A, B, C here if you want to do that. But from here, I'm just looking for an entry. But just because I did not label does that mean that I do not have the structure? It doesn't mean I don't have a structure. I've got the structure. I know what I'm expecting. I know which levels I'm expecting the market to move to. Okay. Everybody happy with this? To get used to this, you need to do a lot of charts. We've got a number of alternatives on this one, but the stock and the RSI will confirm. Right now, the RSI is just dipping under 50. It's dipping under 50, but the stock is right at the bottom. If we're going to have any sell setup here, your stock will be at the top. Right at the top, at the end of the correction, that's where your stock is going to be. If you get that, then you know your trade is ready, but your RSI must be below 50. If it's ready, it's going to close below here. So when the candle closes below the flag and your RSI and your stock have confirmed, then you can actually take the trade, stop loss here, you take it all the way down. So that's why I've got this trade under trade setup, not playing out as yet, but if you get this setup, that's the trade that we're going to be looking for. And that's how you look from historical data to a trade. Now, this is a trade setup. Okay. How do you contrast between a diagonal and a WXYXZ? Okay. A WXYXZ, a diagonal, we've got a clear WXYXZ here, I think, on this pair. Let's see here. A diagonal has got a specific set of rules. If you've got a diagonal going up 1, 2, 3, 4, 5, for these to be a diagonal, we know that your wave 4 should be within the territory of wave 2. 1, 2, 3, 4, 5. And a diagonal must be converging. Must be converging. If it is converging like this, then it's a diagonal. This cannot, look at this one here. Now, if you look at this one here, this one is actually a three-way move, but not a WXYXZ. Let's go to pound Audi. You will see it clearly. Your wave 4 must be within the territory of wave 2. If this was going to be a WXYXZ, you will see it. The rules and the guidelines will guide you. I don't even know how to answer that one. Your WXY has got a specific set of rules. Your diagonal, you will see it must be converging, just like that. And you should have divergence here on a diagonal. It's a requirement. Between 3 and 4, there should be divergence. Any other questions, guys? Everybody happy? Now let's look at this one. What do we see on this one? Let's go weekly. I'm not going to go through all of it. I'm just going to show you what I see here. On this one, I see that we've got a big move from the upside. That move can be 1, 2, 3, 4, 5. It's actually a pulsing move. It's actually 1, 2, 3, 4, 5 here. But this move does not start here. It starts here. That's another subject. That is orthodox highs and lows. Let's discuss that now. Orthodox tops and lows. What does orthodox top and orthodox low mean? And that's something that is not on the course structure, but let's discuss it. You've got a pulsing move here. You've got a correction, expanding flat, like this. Now, where is the top here? Is the top here, the top of the swing, the top of the swing, or the top there? Where do you see the top? You've got, let's say, 1, 2, 3, 4, 5, A, B, C. Where is the top of this swing? What is the top of this swing? Is it at 1 or is it at 2? Butler says 1. Anybody else? Wakile says 1. So everybody is saying the top of the swing is here. Albert says 2. Now, guys, technically speaking, Albert is right. The top of the swing is at 2. The top of the swing is at 2, yes. But there is what we call orthodox top. Orthodox top. So the orthodox top is at 1. This is the top. This is the orthodox top. Yes, this is the top of the swing, but the orthodox top is at 1. This is your orthodox top, the end of the swing. The swing ends here and then comes correction. Okay? Now, another example, okay, something like this. The top, on this one is clearly defined. This is your orthodox top. And that's how you identify orthodox tops and bottoms. Now, another example with this one, if you've got a swing here, and you've got a running triangle like this, now you tell me where's the orthodox top? That's your running triangle. A, B, C, D, E. Orthodox top is here. Yes, the top of the swing is at 2. But your orthodox top is here. Okay, so you must clearly identify your orthodox tops and lows because that has got a bearing on how you look at the structure. And if you look at this example here, one can say, okay, this is my top. And if this is your top here, and you've got this one doing this, that means this cannot be an orthodox top because there's no structure here. Your orthodox top is here because your swing ended here. If this was your orthodox top, you would have had a structure here and you would have continued. Then this means this swing would have ended here. But because it ended here, that's where you see change of direction. That's your orthodox top. Okay. Yes, you've got an AB base pattern here. You've got an AB base pattern 1, 2, 3, 1, 2, 3. Then it changes the swing. And typically, just as an observation, guys, after the AB base pattern comes a strong down, or not down, a strong change of pattern in the opposite direction. Here's another example of an AB base pattern on pound US dollar. I'm going to come back to this one. I'm just going all over the place here. Let's switch on the labelings here. Let's go daily. You can take a screenshot. You can go and analyze this one later. You've got an orthodox, you've got a, not the orthodox top. You've got an AB base pattern here, breaks the top. Look how quick and how fast the move to the downside is. So when you get an AB base pattern, the trend change becomes very violent in the opposite direction, changes very quickly. Go back to US dollar CAD, back to weekly. Switch off. If you're doing this historically, you are going to see this three-way move here. A, B, and C. Now, what is happening here? You've got a three-way move down. You've got a three-way move down. You've got this corrective structure here. This corrective structure could make another three waves after this and becomes a WXY. And that WXY could be the start of a higher degree first swing yellow. But even if you look at this yellow, maybe a bit small compared to this one and compared to this one. But for now, we'll assume that after this 1, 2, 3, that is our yellow. And if it plays out bigger than this, we're going to adjust the degree. For now, we could be looking at this as it is. Now, yes, we are looking for this to continue. This is a corrective structure. It's going to come down. It's going to come down. Yes, it may push up higher to come break the low here, but it can come back down like this. It can come back down like this, 1, 2, 3. Or it can even come down correctively like this. Let's do this with red. Can even come back down correctively, which means you may not even be able to trade this swing as fast as you did this one, and it does this, and it does this before you actually get that other move, this one here. So expect both possibilities. Here's a question. Do you always try to identify the patterns from the longer time frame first and then go to the lower time frame to validate your analysis? Yes, I'm not necessarily going down to the lower time frame to validate the analysis. It's a whole process. It's part of the process. I'm going starting higher so that I can understand the overall direction. It's like going from one city to another. There's a number of ways you can take to get from one city to another, some longer, some shorter. So what you're doing is, you have to go from point A to point B, but between point A and B, there are a number of routes that you can take that can all take you to B. So the lower time frame is like your lower degree routes, not degree routes, your smaller roads. I don't know if that explanation is clear. You are going to the higher time frame to know point A to point B, and from the lower time frame, you're trying to get the direction to get to that B. You're trying to get the direction. Now here, we are saying, okay, we could be going here from A to B. Now this is our A. The color. This is our A. Now we want to get here. We've already identified the 2 points. All we want now is to understand, how are we going to get to this one? Are we going to get this to this one straight like this, or are we going to go up first? Let me clear. We're going to have something like this. Let's say we want to get here. Are we going to come down here with a pulsing move 1, 2, 3, 4, 5? Are we going to go in just simply 3 waves? Higher time frame has identified you need to go from A to B. And lower degree is just to get you the direction, to get there, to get there, to get there. You get to another city, you get directions. You get to another city, you get directions. You get to another city, you get directions. That's how it plays out. And that's how the course ends, guys. Please watch the stock and the RSI seminar and the market correlation seminar. And do put in some work over the weekend. You've been a great bunch. Thank you for attending. We will be together for the next 2 years. We're going to be doing this on a daily basis, Mondays to Thursdays, usually 11 a.m. GMT, but I will advise if 11 a.m. GMT is not working, and if not 11 a.m. GMT, it's usually 1800 GMT. Thank you, guys. Hope you enjoyed it. Have a great one. I'll see you on Sunday. Cheers. Bye-bye. You can, for now, the guys if you're attending the course now, you can post your charts within the course channel, and the course members. Okay, so let's share with other members, and if you are not getting a response, you can ask me to check your charts during the daily webinars. It is not practical, guys, for me to check your charts at any time of the day. I see some try to send me charts on WhatsApp. Yes, you can send me a chat directly on Slack, but it's not practical for me to look at your charts or comment on your charts at any time of the day. The best is when we're doing it during the daily webinar. I open your chart and I give you guidance like that. So if you send me a chart directly, don't expect me to comment and say with W of the blue degree and all those things. That just takes too much time. We don't comment on the charts like that. We open it up, I put it up on the screen during the daily market analysis session, and then we discuss it like that. Unless you are in trouble, you've taken a trade that you shouldn't have, and you need advice, then I'll make time to assist you. But please don't find yourself in that situation. Are we happy? That's it. Cheers, guys. Have a great weekend. See you on Wednesday.